This is Paul Singh, the market speculator, with the trade report for Thursday, October 27, 2016. Big day today after the market with Google and Amazon reporting earnings. Two of the four biggest companies in the stock market reporting. That could lead to a little bit less volatility today. Everyone's got their eyes post-market, and we'll see how that plays out. Nothing for us to do in terms of trading those. But pre-market here, we're about an hour and 15 minutes before the open. S&P up 0.25%. Crude, which we need this one to go up here, is up 0.33%. Hopefully that can continue to run here. And then gold, 0.21. So not too big a move here, but at least we're in the green in these areas here. First thing we're going to do is we're going to touch on oil. Yesterday, we hit my stop level, which was in the low 25s, around 25.25. Made the big move down in the morning and then had a really strong initial reaction to oil inventories. Let me show you the intraday chart here. You can see this big pop here was right after oil inventories was announced. And it looks like we were running right back above 26, all the way down from 24.50. And then slowly we kind of pulled back in here the rest of the day. Now I'm going to give it a little more room because we're at these moving averages, and we did have that initial pop on oil inventories. I'm going to see if we can bounce back here today. We're set to open right at our initial stop level at 25.25. Now I pointed this out in a note. If your risk is too much on this, you should get out. You don't want to increase your risk too much, but I'm still within my normal risk parameters, even by loosening up. From my account size, only 1,000 shares, I can take another point here and be okay. So I've loosened this a little bit, but that's a judgment call you have to make. Semiconductors pulling back a little here. Now remember, we're pretty aggressive with our target here. Entry in the 42s, we got up to 47, so 5-point move here. Really nice on semiconductors. Remember, the reason we're in here is because it's a relative strength sector, as is much of tech now. Top of the range is around 50, and we're looking at the 48 to 50 range, and we're set to pop a little bit this morning. So maybe we get the opportunity to take profits. OAS, very strong, even with oil pulling back. It is in the green energy. So we still like this, and I'm still playing for a breakout over 12. Netflix is not continuing the way I would have liked on this short setup here. Now I'm using 130, right around 130, 131 is my stop level for the short. But honestly, I would have liked it to already kind of made its move here, which it looked like it initially was going to do, but now it looks like it's consolidating and maybe makes another run. Still going to use the 130 level, but not as confident in it as I was before. Going back to SPY now, same strategy. We're kind of in a holding period here, and now we're just back in the middle of the range. Still does not want to break out in either direction. And we expect this going into the election, November 8th. Maybe Google and Amazon, if they have blowout earnings, we actually get a breakout. We'll see. But really, it's just choppy range-bound trading where it's really tough to make very much headway here. So this is the way it's probably going to play out for the next week or so, although we're still willing to take trades as they come. The sector we're keying in on is steel, which I still like a lot. I like the way after this big run here, X has consolidated, the move from 15 to 20, high of 20, about 21, consolidating in here. Maybe you just take a shot within the consolidation and see if it breaks out pre-breakout. So don't be surprised if you see me take X. I really like AKS, but this is too extended here. It hasn't consolidated, it's still running up. And another one I'm going to add is MT. Not quite as volatile, but has made a nice run and is consolidating, maybe if it breaks or tests the 9 here. Two other stocks that have been beaten down that I like are GoPro, which is consolidating right under the remount level. It's a low risk play here. If you just enter here, place your stop about a point away, and then kind of play this pre-remount for maybe 2 or 3 points, should give 2 to 3 to 1. And Fitbit, another beaten down, very similar pattern. Pre-remount is remounting the 9. Entry around 14. Maybe you can place your stop down here, about a point, and then you could see a move to 16 to 17. Now, I haven't looked up the earnings date on these, so you have to see when earnings is. I would not want to enter if earnings is less than 2 weeks away. Now, we've got this on the left here is an earnings breakout list for fourth quarter. I've got 21 stocks on this list here, and I'm not going to name them all, but if you want to go through, I'll scroll through this so you can see every stock on this list. A number of them are potential setups here. American Express, AXP, made the run, consolidating here. I would watch for a pullback and hold right in here, or a break of the top of the range, and that's a similar pattern throughout here. DPZ, Domino's, pulling back towards the 9, or a break of the high, and then PayPal, a deeper pullback. But let's see how it holds the bottom of the range and the 9. So 3 earnings breakout stocks, post-earnings breakout stocks that I'm watching for potential entries. So that's it for the trade report. I'll see you guys later today or early tomorrow.